Hey everybody, Economic Ninja here. I think this is absolutely huge. Let me explain why, but I don't know if this is going to get out of play, so let's see how this goes. This has to do with Evergrande, Chinese real estate situation, and how other companies are about to ratchet the craziness up to 11. So this is out of Reuters. I'm going to link the article below, and I'm going to explain. I'm going to get to probably towards the end of the video. Not trying to hold on to you, but trust me, I'm going to get there, explaining how this sort of works in the background, how it's going to absolutely blow up in their face. It says, amid Evergrande crisis, more Chinese developers to issue ABS. That stands for Asset Backed Securities. It says some of China's major property developers are planning to issue asset-backed securities in the near term. Near term, it means they're already doing it. They're already getting them ready right now. It says it's during Evergrande, that is, China's Evergrande, wrestling with debts of more than 300 billion, right? And just so you know, people go all the time, well, that's not as bad as Lehman. And I go, no, it's way worse. I'm telling you, this kind of stuff, the rumblings of Lehman were happening well before September, okay? That was happening in the end of spring of 2008, all right? So this is exactly what's happening right now, but even bigger. And you'll find out soon enough. It says that they just said on Friday there was no guarantee that they would have enough funds to meet debt repayments, prompting the country's top financial regulators to calm the market, okay? So here we go, right here. Country Garden, the country's top property developer, said on Sunday, just yesterday, that the company is considering applying for the issuance of supply chain asset-based securities, ABS, in the near term. It's an innovative financing tool. Man, this stuff makes me sick. It's an innovative financing tool. Supply chain ABS products can support upstream suppliers financing and ease financing difficulties for small and medium firms, the company said in a statement. All right, I'm gonna stop right here. It's total crap. You guys can read that stuff. Let me explain the backstory. Now, I've been talking about the commercial mortgage-backed securities market since beginning of August, late July, I think. I did some videos back in the day, and I said, these are gonna get very little play, but these are gonna become, everyone's gonna know what a CMBS is, I believe, by January. Although, to be honest with you, the rhetoric is so strong now with these different media outlets, I think that they could push this off until the early spring. This is why. Everyone's gonna become a pro because it's gonna collapse the system. Commercial mortgage-backed securities, there's so much fraud inside of these, it's insane. And it's literally just like 2006 mortgage-backed securities debacle. Now, how they said this is an innovative financing tool. When large property developers are going and getting financing, most of the time they're getting financing as a company. So they're putting their company's balance sheet, profit and loss statements out before the investors, and they're getting financing through that, right? This is a different kind of tool. This, what it does is you're able to take specific properties, huge properties, right? And actually create a asset, like a security around that, and then sell it off into the market, all right? I'm not saying it's publicly traded, they can be, but they definitely get traded amongst large financial institutions and investors. And what happens is you've now taken that property, let's say it's a 1,000 unit high rise, and you've now built an asset around that you can securitize and trade around, and you know the how that asset is performing, right? Based on the amount of doors that are rented, if rents are going up, and expenses. And that can be traded up and down, up and down. Now, this is where the company absolutely kills it in this situation. See, the company still, they no longer own it, right? Because it's now its own securitized asset. So whoever buys it owns the rights to the income. But the company now that securitized that actually gets paid to manage it. And most of the time that's done through a subsidiary company. So it keeps it real clean and legal, right? But when you realize how much more they're making in two different ways. First off, they were able to collateralize or build that asset and then sell it into the market for a premium over what they already had it in their books for, right? Because now, when large institutions are buying these things, let's say they're starved for yield and they're looking for, they're used to getting, let's just say 4% a year on guaranteed, government-backed debt, or 3%, wherever they're looking. I'm just talking global. I'm just giving an example. And now they're able to collateralize this asset, and they go, you know what, we'll give you 5%. This is worth 5% at this valuation. And that valuation between the 4% and 5% could be massive profit for these companies. Then, not only that, do they get to sell it and they get to put money in the bank, right? Because they've just given up ownership of it, but they get to manage it. And that is huge cash flow. Now, here's the scary part. In 2006, we found out that the mortgage-backed securities were a complete sham because they were being lied about. Many times we saw horrible, like these mortgage-backed securities would be all bundled together and sold into the market, 1,000, 2,000 homes in one whack, right? The debt on them. And people would buy them believing that they had a good investment and they were performing well. But when you looked at the average credit score of the borrowers that were inside that mortgage-backed security, they were horrible. And they were salted on top with a certain amount of good credit scores. But by and large, they were underperforming assets because the borrowers that were borrowing money on those debts, they couldn't afford to keep those houses in any bit of a downturn. As a matter of fact, a lot of those we found the big problem that was really easy to spot was when the Federal Reserve started raising interest rates and the amount of people that had ARMs or adjustable rate mortgages inside of those mortgage-backed securities started to fail because they couldn't keep up with the added interest rate. The payments kept going up. And that's how ultimately the entire thing was found out. Well, now we have something very interesting right now where these companies that are already dealing with distressed assets, right? Because of a complete shutdown of the economy, when it stopped, it shuttered the entire economy. So now inflation's rearing its ugly head around the world, and there are people that are gonna have a lot of problems, if not now, in the near future because of inflation, to be able to pay their mortgages, pay their rents, things like that. And this is gonna be found out. But what this is an example of blowing up the bubble, but like using, a balloon and blowing it up with your mouth and all of a sudden say, the heck with this, and put an air chuck inside of it from an air compressor and hit the button and watch how fast that thing blows up. And so we're about to see what I believe in the next year in China and other places in the world, absolute devastation rock the world. And that's why these companies want to do this. They want to split these companies up. They want to sell it, take the money. They're setting up subsidiaries right now, corporations that one corporation will take in the money, right? Or another corporation is going to manage the place. And they're splitting things up right now because they know the end is near, and actually they know it's collapsing right now, so they can legally split up their companies and be able to hold on to whatever's good about them, put them in different pockets of different corporations. So anyway, guys, I hope you got something from this. I'm going to link the story below and get this out as soon as possible. The Economic Ninja is out.